All right, so housing prices are coming down and the housing market is crashing, or so they say. We got back our job expectations and we also missed on the jobs created for the labor report. We have unemployment going up and we also have a concern for an AI inspired unemployment recession. We also have Trump declaring a national housing affordability crisis. And I'm going to go over what all that means. But on the flip side, we also have um, Berkshire Berkshire Hathaway, which is owned by Warren Buffett. If anybody knows about Warren Buffett, he's more of a long-term thinker, and he just invested $1 billion, close to $1 billion. I believe it was like 800 million into one of the biggest new home builders, D.R. Horton, if that's correct. And so you have all these conflicting ideas, and then you have people saying that there is a housing market a housing market crash coming soon and it is true, housing prices are coming down. So I'm a licensed real estate agent here in Houston, as well as an investor. And so some of these things, looking at objectively, everybody in a way is correct, but you have to everybody can form an opinion about what they think is going to happen, but you have to look at all the data and congregate it and then make your assumptions from there. So I want to go on one of the first things, which is the job expectations. You also have this whole thing about the not to get political, and I'm not going to talk about politics, but sometimes you do have to, bring in a few names here and there. But the whole thing with the interest rates coming down, the president of the United States, Trump, wants interest rates to come down, and so he's pressuring the chair, Fed, Jerome Powell. And in this last labor report, that's one of the reasons why more and more people are starting to think that interest rates are going to come down half a point. When originally it was a quarter of a point. So let's go into the job expectations. The ADP report, they were expecting around 7,000. We got 54. And then in the labor report, jobs created 75,000, but we got 22,000. And that's significant miss for our jobs created expectations versus what we got. And in the past months, we also got information back, because a lot of this is lagging indicators. We're looking at data from back in June and July, and and we've actually been revising back down, meaning that let's just say we got information that there was, let's just say, I don't know, 60,000 jobs created, but we have to go back and revise in June and July because we actually found out that it wasn't 60. It was, let's say, 40. So that's exactly what happened. In June, we got that revision down at negative 21,000. And then in July, I believe we were up by 6,000. But what all that basically means is that the Fed is now, because in the it was in the, I think it was the J-hole talk whenever Jerome Powell came and he spoke that they are going to give more significance to the jobs versus inflation, meaning they're looking more into the jobs data, meaning the data that we just got a few days ago, they're going to give a lot of a lot of consideration into that versus inflation, which was what Jerome Powell was looking at. Depending on inflation, then we're going to see if we're going to bring the interest rates down. But now we're looking heavily into the jobs data, and this is what we got. Meaning, we got a lot of misses, and we got a lot of misses. I mean, like, we missed, and so that's the whole reason why economists are now projecting more that half a point coming down for the interest rates. Right now, let's go to this AI inspired unemployment recession. Let me go back. Let me see if I can bring some. Let me see. Yes. So let me quickly talk about this AI inspired unemployment recession, and then we'll get into a little bit of the data here. When it comes to AI, there's let's put these two things together. So there's unemployment going on. There's a higher unemployment rate. What does that mean? People are losing their jobs, or people are not going back to work, right? I think I haven't looked at the labor force participation rate as far as people going back to work, but we do know for sure that people are losing their jobs and or quitting whatever situation that we have going on. And so companies, what they usually do is whenever they lose people, because we want to be efficient, because they want to be effective and efficient, they find ways to in a sense replace And so AI is the next thing that can replace. And so if you have companies that are putting their money into AI, it's going to be a little bit easier for them to replace these people that have left or that got replaced. So whenever, let's say, whenever rates do come back down and companies have a little bit more money to play with, what do you think they're going to put their money into? Are they going to put it into thinking as a capitalist and a company that wants to profit? They are most likely, obviously not everyone, but they are going to try and make that AI work before they think about hiring, more people to do those jobs. So what does that mean? So if we look at the 10-year yield the 10-year yield is going down. Let me go into this data. All right. So, okay. So here's the labor force. So again, the labor force participation rate has been declining slightly here, and it's recently been on the incline from 62.2 to 62.3. Significant, but I did want to get into a little bit of these. So I did want to get into this Trump weighing in on the declaring national housing emergency. This was September 1st. So they already declared it. I believe it was 2 days ago. This video is coming out on the 6th. So let's see here. So the Trump administration, they already declared, we're trying to figure out what we can do, and we don't want to step into the business of states, counties, and municipal governments. So here's what they said. So Bessent declined to list any specific actions the president may take, but he is suggesting that the administration officials are directly studying ways to standardize local building and zoning codes and decrease closing costs. Now, this is good and it is significant. Why? Because everybody knows that one way to help the housing market, and I can give a good example here. One way that's going to help people buy more houses is building more. Why? Because we all know supply and demand. If we have more supply of houses, then we have more demand. And what does that mean? If there's more supply, usually because buyers have the opportunity to choose, that's when sellers become a little bit desperate and they're willing to negotiate lower. And that's what's been going on for the past few months. As a real estate investor, I've represented a few buyers and a few sellers, and so standardizing local building and zoning codes is going to be very good for the housing market. A great example is if you look at Texas versus LA. LA, they have very strict building codes, zoning codes, and building restrictions, which make it harder to build, which makes the demand high and the supply low. What happens there? Housing goes up. Versus in Texas, you have a lot of. Now here's a good example that I'm gonna show right now. Let's go back. In Texas, this is something that I'm dealing with a few sellers right now in this area. Whenever you have a lot of building and resale, you have competition, and so buyers are able to request lower. They're able to negotiate better. So here's a good example. I'm just gonna give the overview of this concept where I'm working with a buyer in this area. Let's just go to this one. Let's say 335, right? They've already cut their price by 10,000, and if you look at all the listings, most listings have cut their price 10, 20,000. I even saw 30,000 one. I don't know if they were priced way too high or they've just been price cutting over time. But at the same time, I don't know where. So like around this area, you have newer builds. They're not new builds, but I think that other property was a 2005, and these are 2022s, 2021s, and they're selling at or around the same price, even with price cuts. And there are actual new builds that if you go to these new builds like D.R. Horton or Lennar, they will not only give you a somewhat similar price and maybe even more square footage, but they will also put in a little bit of money to buy down your rate, meaning you can actually afford a little bit higher or you can actually afford that property, if that makes sense. Now, going back, so here's another thing that I wanted to talk about. The mortgage demand for home buyers pulls back. Now, this is very significant. This is one of the reasons why the price cuttings are happening, is because buyers are not able to apply for a loan. This is exactly why. So mortgage demands from home buyers pulls back after 4 weeks of gains, and those 4 weeks weren't even that dramatic. Mortgage rates fell again last week. Yes, they did. Where is it? So total mortgage application volume dropped 1.2% last week. That might not sound a lot, but those are less buyers each time in the market. So here's the thing: potential home buyers today have a lot more to choose from when they did last year, but prices are also higher than they were, at least on a national level, and that is a problem because if you imagine, there are less buyers this year than last year, but then the prices are also higher, meaning that buyers are getting priced out. Let's say you're a buyer and you could only afford, let's say last year you could only afford a house that was 200,000, right? That same house today might be close to 280, maybe depending on the location in the area here in Houston, maybe close to 300. So you're way priced out, right? Unless you got a better job or you got another job, which most people aren't getting raises, then that house is long gone, and now you have to find a house that was maybe priced at 150,000 that is now priced at 220,000, meaning you get less bang for your buck as a buyer. So you got all these things that are, let's say, so again, here is mortgage rate application index down 10% year over year and almost 50% from the pre-pandemic level, which is around this area. So you have all these things that are impacting you. You have your jobs reports, less jobs out in the market. You have a concern for an AI-inspired unemployment recession. So this is the whole reason why you have everybody saying there's a housing market crisis, house prices are going down. And again, yes, they are. House prices are going down. That's what I've seen. Even some of my listings, we have about 6 listings right now, and we haven't dropped prices for all of them because what we do is we try and see what is actually going on in the market, and we price them accordingly, and we're actually starting to price them lower than what is expected to sell, so it can actually sell, if that makes sense. So we do price our listings accordingly. We never price our listings way out of expectations. We're not one of those where we're like, oh, let's price it higher so that we can negotiate lower. No, because you're not going to get eyes on that property, right? You want eyes. You want eyes on the property, and then also prices are coming down. Housing prices are coming down. So what does that mean? What does that mean? Because now we have blood on the streets, and if anybody knows the key concept about investing is you want to buy when there's blood on the streets. But why are people not buying? Number one, they are priced out of their houses. Number two, they can't afford a mortgage. And here's another reason why buyers might not be out buying houses is because they just simply don't know that they can buy a house, and they might even be available to buy those houses. So moving on to the whole Warren Buffett thing. So people are gonna make cases that housing prices are going to keep coming down. Now, I did mention the whole blood on the streets. So that's a term that comes from investing. Usually that term comes from investors. To just explain that term a little bit, it means when things are coming down. Here, let me bring this up. I made this. I made this. So I wanted to show you this real estate cycle, right? Right now, because the whole reason why I brought this up is because I said blood on the streets. And to explain what blood on the streets, it's typically a investor term that we use when it comes to like the whole cycle, right? Now, if you think of a graph, like a cycle in terms of like coming up and down, right? We're usually in cycles we're going up and down, up and down, up and down. And usually you don't want to buy when you're at the top. Why? Because you're going to come down when it comes to prices. Typically, you want to buy here in this area when when prices are low, and this is the whole blood on the streets. There's a lot going on. There's oversupply. There's high vacancies, meaning that houses are not getting sold. Rents, people are not renting. Why? Because there's decline in prices, decline in rents, and decline in construction. Now, I did mention that new construction numbers are down. I think it was 37%. Don't quote me on that, but for sure, margins for new constructions are down as well. So what happens when you're at the bottom, right? When do you typically want to buy? If you're a home, if you're trying to buy a home to live in it, it doesn't really matter because you're keeping it for the long term, right? If you just want to live with your family, you just want a place to live, you want to buy a house, it doesn't really matter. But in a way, should you, like, let's say you're at the top of the market, right? Should you wait? It can depend on your situation, obviously. But if you're an investor, it kind of depends. Now, me as an investor, I would buy at the top, at the bottom, because I have different ways of buying and selling. That's a whole another different video. But let's go back to the investor who doesn't have all that information and they just either fix and flip or wholesale, or they just do the Burr method, which is buy, rehab, refinance, and repeat. Just the traditional investor. You do want to watch out for those things, right? So let's say you kind of want to. It's hard to time the market, and you shouldn't really. But if you do know that you're in this area, if you're in this low area, if you're in this blood on the streets, or this is like the prime time to buy, right? And if that's now, should you be buying? Well, yes. I right now I'm looking for properties, right? And should you? I mean, that's on you. But and I don't want to be one of those real estate agents that say like, oh, buy every time. Buying a house is not for everyone. But as an investor like me, I want to buy all the time. So especially if we're on a downtrend, and that's what we're at right now. So you get absorption of excess supply, right? Meaning, we're gonna start building, and especially this is the thing that that Trump was declaring. Now there's two things. Let me just talk about these two things, and we'll wrap it up. So there's two things that impact the housing market, and that's interest rate and oversupply. Right now we're undersupplied, meaning we need more housing, we need more building, and that's one of the reasons why. If you read the so Trump declaring that that administration is studying ways to standardize local building zones and decrease closing costs. Building zones will help more of that supply issue, right? So if they get lenient on those local building and zoning codes, which honestly is just, obviously you want to be safe. You want to make sure that these housings are created safely in a safe manner, but you just can't go overboard. Like, I won't get into that. Now, again, I believe I was talking about standardizing. Okay, so yes, let's go back to this. So this is what happens. We start building more, and there is more supply. So now the buyers, so because prices have come down, which they're coming down right now. Buyers have more ability to buy properties, right? Low vacancies, meaning these houses are getting bought, these houses are getting rented, right? And then we have increased rent and prices, right? So after a while, after interest rates come down, more properties are being sold. It starts becoming a little bit harder for buyers again, because it was hard. It's been hard for a long time, since 2020 when interest rates went down and these housing prices just shot through the roof. So it's been hard, but now it's going to become harder after this whole cycle, right? So, and then accelerate new construction. So there's new construction, and then you just have this cycle repeated, right? But going back to Warren Buffett. So Warren Buffett, Berkshire Hathaway invests nearly $1 billion in home building giants. Why? Why do you think? So Berkshire Hathaway has bought major stake in two of the nation's biggest home buyers, Lennar and D.R. Horton. Yep. So why do you think that Berkshire Hathaway is investing nearly $1 billion into these new home builders? And it's those two things that I talked about. Interest rates are prone to come down, and there's going to be especially with Trump. I don't know if Warren Buffett got like a little insider that Trump was going to try and do this, or they're going to try and implement this. But I think the writing was on the wall that interest rates were going to come down either way. Now, the building, if the Trump administration actually goes through with this, which I think is really good, as far as local building and zoning codes, that would be now, again, they're not going to go into each state. But if they're able to work out something on the national level where it will be easier for builders to build, that will help. And then also decreasing closing costs. That is very good because, again, we do have decreasing closing costs will be very good because, again, the buyers are already paying a down payment and they have all of these additional closing costs. So any little thing can help. So overall, I feel like I just gave I just vomited a whole bunch of information. But to wrap it up, if you look at the long term, Yes, we did have a miss on our job expectations. We did have a miss on our jobs created expectations. Yes, unemployment is going a little bit higher, and yes, there might be an AI inspired unemployment recession. And yes, the 10-year yield is going down. But if you look at it long term, um, like Warren Buffett is looking through it, um, you will see that in the long run, housing prices will almost always trend upward. The same thing with all other assets; they usually trend upward. If you know that America and the United States is on a good trajectory, then you're fine, right? Um, so long way to say that it will be okay. Right now, we are going through a turbulence in the housing market, and then probably in other markets, and even in other markets as well. But um, this is just for the buyer who's on the fence of like, should I or should I not? Again, this is not financial advice, but I would say is looking at the long term. Looking at the long term, interest rates are going to come down either little by little, which I do hope it is little by little, because if you just drop the rates again, just like you did in after the pandemic, housing prices are going to shoot up the roof again. Uh, so so yeah, worry not. This is going to take some time to implement these local building and zoning codes, maybe 3 to 5 years, um, as well as decreasing closing costs that could come a little bit sooner. Uh, but that's what it's looking like. It's looking like it's gonna be a slow burn. It's looking like housing prices are gonna come. They're gonna fall down just a little bit, and then they might come back up sooner than expected. Just because we are having a somewhat manipulation when it comes to interest rates. So again, I do want to clarify that not just because interest rates come down doesn't necessarily mean that mortgage rates are going to come down. You have to look at the 2 10-year yield, and that is coming down, and so mortgage rates are looking like they're going to come down slightly.